Hi, welcome to the Market Alert for Monday, the 13th of March 2023. So it's the 13th today. It may become a memorable day because it's certainly been a memorable weekend. However, before we get into that, just remember that the US have put their clocks forward this weekend, so the Dow and all of the other US markets will be open from 1:30 p.m. for the next couple of weeks. So just bear that in mind. Right, so this weekend... Friday we saw the payroll numbers, but these have been overshadowed obviously by the SVB bank collapse, which I say we'll get into in just a moment. But this was the big item going into Friday. This came out at 311k. It was forecast at 524. The market reacted as usual, but then of course it was overshadowed by the collapse of Silicon Valley Bank. It was shut down by the regulators, and also as it says, their biggest bank failure since global financial crisis. Financial contagion fears mixed, NFP hawkish bets eased because one of the reasons for the collapse is the rate increases that have been happening inside of these banks. I haven't got the time to go into this. I spent 3 or 4 hours yesterday reading behind the scenes of all of this, and it would be a 15-20 minute video in and of itself. So what I've done is... I'll show you in a second. I've recommended a couple of videos to have a look at. Let's just get through the rest of the news. So here you can see how big the news is. Silicon Valley 209, 307 for Washington Mutual, the last one. And the best bit is all weekend, of course, there's been fear-mongering of contagion and run on banks, and that people in the US have been queuing up outside of the banks. Yellen's been out, says that they won't bail out Silicon Valley Bank. But last night, so Yellen will help 97% of SVB depositors who had more than 250k. I'll come back to that 250k in just a second. And then overnight, the FT also jumping on this. US regulators protect Silicon Valley Bank deposits and shore up financial system. I'll show you why they've done that, like I say, in just a second. But it's interesting because in this article, they just talk about, I don't know whether I can get that bottom bit in, US regulators said Silicon Valley Bank deposits will be fully repaid. But if we go to this bit, which I thought was brilliant, this is a comment by Anat Admati, finance professor at Stanford. When it gets to this point and you are in hostage situation, i.e. the banks have got the Fed over a barrel, there is nothing else you can do. Admati said, but there is no other word for this other than to call it a bailout. But unfortunately, it doesn't end there, because if you want to read about it, have a look at this. This is the one I read yesterday and spent a lot of time reading. And it was the amount of depositors that were not covered by the FDIC bail-in guarantee. It's 85,000 in the UK, and it was staggering. If I can just find it, you'll see what I mean. Yeah, here you go. So the bank had over 173 billion in deposits, of which 151 billion and a half are uninsured. So this meant that there were a lot of depositors in this bank that had more than 250,000 deposited, and anything over and above that they weren't going to get. Well, they were just going to get a certificate, weren't they? I think it said somewhere further in this article, they just say, well, look, here's 250,000 and here's a certificate for the rest of your 100 million that you've lost. And of course it's worse than this as well, because it affects the UK as well. There was all sorts of shenanigans going on yesterday as well. Let me see if I can just find you some of that as well. So here you go. This was off the Sky News website. Warning of existential threat to UK tech sector after failure of Silicon Valley in the US. Apparently Bailey was up all night. High street banks given 24 hours to rescue Silicon Valley Bank. I don't understand that. Why they were given the option to rescue, when they're all in the same boat, frankly. But so that's what the UK, and also the knock-on effect, because a lot obviously it was a venture capital bank as well. A lot of tech companies, well, not just a few, there were hundreds apparently of tech companies. So the whole thing, you can see where it could get contagious. But if you want to know more about this particular article that I just mentioned and how and why this bank collapsed, then there's a couple of videos here by Michael Cohen, I think his name is. I'll put the links in the email and also below in the description as well. So this one, he talks about why the bank went under, and then overnight we've seen another bank actually being closed as well by regulators, Signature Bank. So the reason for this is the traders are going to go hunting now for banks that have got this this problem. And the problem is, if I just go through this briefly, a lot of banks are allowed to actually put unrealized losses on the balance sheet, but they're not counted. And what happened to SVB is that they exceeded their they had more losses, unrealized losses, than they had in assets, basically. But if you think that's bad, have a look at this. Because all of the big four banks have unrealized losses. And this is all started with the advent of the increasing rate cycle that we now find ourselves in. So Bank of America, JPM, Citi, and Wells Fargo also have unrealized losses, but they're not actually taken into account. They're just sort of put on the balance sheet but ignored. And this is what's happened to all of these banks. So there are probably hundreds of banks out. Well, there will be, because of the rate increasing cycle and having treasuries that aren't yielding enough with long-term treasuries and short-term rates and deposits. So it's going to be an interesting week, to say the least. So yeah, they're certainly not out of the woods yet, and I wouldn't be surprised if traders don't go hunting. But like I say, at the moment they've been bailed out by the Fed, and of course the market's gone up from that. So we'll have a look at that in just a moment as well. So finally, economic news, for what it's worth, there's absolutely nothing today. The market will make its own direction because, like I say, they're going to go hunting for looking for banks now that could be in a similar situation, and then force the sale of those shares. So the market's up, but it makes you wonder whether people want to get out of the market thinking that we may be a bit 2007, 2008 here. The whole thing was brushed under the carpet in 2007. And eventually the dam broke and the whole lot came down. So it's going to be interesting to see whether the stock market holds. So let's move on to that now and have a look at the market's reaction to Friday and overnight with regards to all of this. So my friends, you can't make it up, can you? Friday, the Dow sells off and Yellen comes out, says it's not a bailout, it is a bailout, and the market goes up. So, and despite the fact of the regulator shutting another bank, and the Fed going to bail that one out as well, they're just going to keep going along the line and bailing each one out. So on Friday, before the news broke, the market moving higher on those NFP numbers. Then we get into a decline, and then we get a retracement, and then here you go. No, don't you worry. We've got you back. We've got you back. So the Federal Reserve come in. The market is now moving to the upside. So off the Friday's low, when this all hits, the market is up 577 points off this low up to this point. So like I say, you can't make it up, can you? But it's going to be interesting to see where the traders stick in the market thinking, well, what else is coming down the line? This reminds me very much of 2008. I think I'll get out of the stock market before the prices start to drop. In the German DAX, well, we got a straight reversal. There it is. So we're already at Friday's high after all of this madness over the weekend. You can see we've traded up to it here as the Fed said, okay, no problems, we'll backstop all of this. So all you're looking to see is the market get through the high, or do we get a sell-off when we get to a high, when reality kicks in and they say, hang on, come on, this is absolute utter BS. It's the tax, this is landing on the taxpayers' table again, and they said they would never do that. I mean, she even said it yesterday, the Fed will not bail out. Well, it has to be a bailout, as the professor from Stanford says. It's got to be a bailout if the Federal Reserve are backstopping it. It's not going to do a lot for the dollar. It's not going to do a lot for inflation. That's going to send that higher as they keep bailing out these banks to protect depositors' money. It's a mess, isn't it? It's a mess. So let's have a look at the 5-minute chart. Here you can see the reaction overnight already. The market up 200 points already in the DAX, heading back to, like I say, the high of Friday. And it's already made that high overnight as well, which you can see there. So Friday, you'll see the market selling off as we had the NFP numbers there. The market moving up during the morning, bit choppy waiting. We've got the NFP numbers released there, and then the market dropping down and then coming down in the evening with the announcement by the regulators that SVB had failed, and now we're heading back to those highs. The insanity is breathtaking. So in the S&P, also moving up, they bought back in on Friday, obviously hopeful that the Fed would bail them out. We know the Fed's going to bail them out. The Fed's not accountable to anybody. The Fed has no audit, and it can do what the hell it likes. So, again, no surprise to see the market up, is it? 30-minute chart, NFP numbers, SVB, bailout by the government. Yeah, so much for the FDIC bail-ins. When, in the same in the UK, 85,000 protection. Anything over and above that, you get a certificate that isn't worth the paper it's printed on to cover the other losses above the 85,000. It was $250,000 in America, and now the depositors are going to get all of that money. It's going to be interesting when they go to the bank today. If you've got 100 million or 10 million in an account, I did see a Twitter notice the other day of somebody who got 10 million and ended up with $250,000 left. I mean, that's just foolish anyway. And to leave 10 million in one bank. But that aside, it'll be interesting to see whether she can actually just get the 10 million today when she goes to the bank and try and move it to HSBC or another criminal bank. It's going to be an interesting week. FTSE 100, again, up, reversing. The Bank of England will have to do the same now for the tech companies and everything else. Make sure the payrolls are covered, which I don't have a problem with, frankly, because people's jobs, etc., on the line there. So at least they're not going to end up having to carry all of the possessions out of these companies. Not only that, but what also came to light last night in further research is that the digital currency, the CBDC, is currently up for tender. And the tech companies are actually funded by the SVB banks. So if the government wants to implement the CBDC technology and farm it out to be actually constructed and programmed, then they are going to need to help SVB customers and companies that are potentially going to lose a lot. So the 30-minute FTSE there, again, it says it all, doesn't it? It says it all. So have a look at the currencies, see how they fared. So, yeah, again, not much of a reaction. I mean, you can't expect much of a reaction, can you, when the Fed come and actually just support everything? Friday, the GBP JPY moved up. It moved down then with the dollar. And then overnight, again, bailout, and it's moving back up. Meanwhile, in the pound, it's moving back up because the dollar's getting trashed because they've just printed, I don't know how many billion they've printed. It's going to be 150 billion, isn't it? That's what the depositors were in that article. So it was 150 billion already printed overnight. So yeah, the pound up, a 30-minute. You can see it was up, came down a bit on Friday, and has gapped up there as well. So in the US dollar, this down for Thursday, Friday, and overnight, also showing some weakness there. But again, if you're going to print money, it's going to be inflationary. It's not good for your currency. Dollar moving lower there once more. So have a look at the metals, see how they're faring. And in silver, big move up on Friday as SVB closed by regulators, up on the overnight as well. Not a great deal. Had the contagion been allowed to continue, well, it probably will continue, but it's been stopped at the moment, finger in the dike job. There you can see the announcement, silver up, along with gold up as well during Friday and up on the overnight as well. But it's been sold into and brought back already which you would expect. And the gold-silver ratio, they're down a bit on the overnight. One thing I forgot to include was the trades for the last week. As you can see there, 1,522 and a profit factor of 1409, and that's with a 53 to 47 win-loss ratio. So a good week last week. On Wednesday, I was saying to a friend, there's something not right about these markets. There was something that happened in the price charts, and sure enough, it then started to unfold. But this is not any gift on my part. It's more of a gut thing, because it just didn't seem right with all of the price action that was happening when the Dow opened on the Wednesday afternoon. And then Thursday it got worse. Friday it all came to light. Okay, that's long enough. Let's get this out so that we can see what happens at 8 o'clock. Okay, that's it. As ever, thanks for watching. See you in